Hi, this is Brian Neal with Tradetobefree.com. I'm showing you right now an excerpt of a recent presentation we did on Trade to Be Free and Invest to Be Free and our methodology. And we talked about chart patterns and one of our favorite chart patterns in that presentation. And I wanted to share this with you today. This is one of the patterns in the market right now that's worked very well over the past few years. We've had many of these patterns on top growth stocks, and they've done very, very well after they've broken out in many cases. And this is an ascending base pattern. Again, what it is, it's a pattern where you have three rising valleys. Sometimes it's called three rising valley pattern. But the ascending base pattern is a little bit different in that it's generally a break into new highs on a top growth stock, and the valleys are a little smaller. You know, the pullbacks are 10 to 15%. So the ascending base pattern is basically three successive highs normally over a 10 to 16 week period, around 3 months, 2 to 3 months or so. And what you have is you have a move into new highs, a pullback of 10 to 15%, another move into new highs, another pullback of 10 to 15%, and a third move into new highs, followed by a similar pullback, and then finally the breakout to the highs. And this often leads to a climax run in a stock. This often leads to a very big price move. Sometimes stocks even double out of this pattern. So I'm going to show you an example of this in a recent newsletter. This was back in January of this year on a stock that you're familiar with, I'm sure. And this is Apple Computer. This chart's a little elongated, so hopefully you can read it well enough here. But in the pattern here you can see that there's three successive highs over, let's see, 1 to about a 3 month period, a little less than a 3 month period, and then a consolidation period followed by a breakout to new highs. And this breakout happened to occur on an earnings release, one of the best earnings releases of all time, in fact, by Apple back in January. And this move in new high was accompanied with very large volume, and that's what we like to see. We want to see that breakout with a lot of volume, conviction behind it. And when you get that kind of gap in a new high, sometimes you see a pullback to close that gap. But often that low point of this candle right here on the day it broke out offers a support area for the stock going forward, and that's what we saw from that point on. Apple went on to go up 40% or so from there within several weeks, and we made quite a bit on this breakout. So when you're trading, you want to look for this pattern, especially on top growth stocks. It doesn't work as well if the company doesn't have a very strong track record of growth or very, very good prospects for growth, and a lot of institutional support behind it. But it's a very, very strong pattern, very bullish pattern. Not too many traders know about it and trade it, and a lot of people miss this one on Apple back in January. But we had that in our newsletter, as we did several other ones with several other ascending base patterns over the past few years in our newsletter, and we continue to look for those and find those throughout each year. So if you haven't yet, I would encourage you to try 3 weeks of our newsletter. We'll show you this pattern as they come up, and hopefully you can make some money off these. It's 3 weeks, there's no credit card required, and you'll see this pattern along with several other very bullish patterns in that newsletter, and I think that'll help you a lot to understand and recognize this pattern when it comes up. Alright, that's about it.